Kevin Hincks, co-host of Fast Market here on CBOE. That's where he is. He's giving us some of your thoughts from this busy trading week, and it's not over yet, Kevin Hincks.
You know, Nicole, as we get into earnings season, we had a lot of economic data, a lot of earnings that we're working through, and the one thing that we can all agree on is the economic data was solid. Right? The inflation data that we got from CPI and PPI was solid. The jobless claims was solid. We got a really good look at the U.S. consumer with JP Morgan's earnings, Bank of America's earnings, retail sales, and this morning American Express's earnings, all showing, you know, solid U.S. consumer snapback from down months in April and May. So as we get through this week and work to next week, even, you know, in terms of corporate earnings, it's that double story of high expectations, you know, a high bar for a lot of names. You're seeing it in Netflix. You're seeing it in some of the banks that had run into earnings. And then there's those names that had a low bar for earnings, like PepsiCo. Diane King and I were just talking about. So this earnings season is really starting out. Netflix put up great numbers, not holding at these levels because of how far it's ran. That could be a theme going into next week, because next week's going to be not a big week for economic data. Durable goods, we come out on Friday. Besides that, it's kind of light except for some housing, but we'll get Google Alphabet, we'll get Tesla, we'll get a lot of other big names that are, you know, we're starting to get closer and closer to large cap technical. So yeah, coming off a really good week for the markets, looking to next week, earnings are coming at a faster pace, Nicole.
Indeed. I mean, look, we're just kicking it off. I love this summation that you gave us, really showing that the consumer is alive, and that's what's keeping GDP afloat, keeping this economy going, is this consumer that continues to spend. And we see them, you know, with the airlines too. I know we've gotten some of the mixed bag here with the airlines, but the cruise lines, particularly the premium seats are going. You know, well, let's talk about the Fed a little bit. What do we think? We're getting closer to that Fed meeting, and we're hearing all different things. Of course, we have the Trump-Powell debate, too. But what do you think the Fed will really do in this next meeting?
So remember, the Fed meeting is July 29th and 30th. So by the time we get in Monday morning, we'll be in the Fed quiet period. So we won't hear from them for the next few days. But Christopher Waller's already out this morning with a big interview talking about how we need to cut rates in July and not wait till September. Remember, there's no August meeting, so the next one after this is September. He thinks we should go right now, and he gave a long interview talking about why. He said he thinks the labor market is at a tipping point and needs to have lower rates to adjust it. He also said he thinks there's risks in waiting as that Fed funds rate, as inflation comes down, that Fed funds rate at 4.25 to 4.5 becomes more and more restrictive as that gap between inflation and the Fed funds rate widens. So he thinks we need one in July. Now, right now, as it sits, there's very small chance that we're going to move at the July meeting. The only way that would happen is if they come out next week and start guiding towards that meeting. I think they're not going to move, but they're going to guide towards a September rate cut. And I think that's where the interest rates stand right now. But the economy's doing well. Unemployment is 4.1%. But inflation is what's giving the Fed the ability to lower rates, I believe. A strong economy, but inflation doing well allows them to bring that rate down, Nicole.
And then sentiment, right? That's an important print today. We haven't gotten that yet today.
Consumer sentiment comes out in about an hour. And, it's been a very volatile number, right? It's the hard data versus the soft data. This is clearly the soft data. The expectations are for it to tick up very slightly from 60.7 to 61.4. And inflation, year ahead inflation expectations to stay at 5%. Think about that, 5%, when a lot of the inflation numbers we're getting are in the mid twos. So yeah, that sentiment data, that soft data, remember that spiked after the election. Consumer sentiment went down, inflation expectations went up, really discounted. And some people, especially Jerome Powell, has come out and discounted that. So has Scott Bessent. So I think the soft data, the sentiment data has become less and less important as the hard data is overwhelming on the strength of the U.S. economy and inflation coming down, Nicole.
All right, Kevin Hincks, a happy Friday to you, and we'll check back with you there live at the CBOE.